Good afternoon. Good afternoon. Welcome back, everybody. Welcome back. How's everybody doing out there? Happy Friday. Today is Friday, June the 27th, 2025. We're almost at the end of the first half of the year. We only got a few more days left, and we're going to roll over into the third quarter of the year. And we've been having a lot going on. Y'all press one if y'all can hear me. Press one if y'all can hear me. What's up, Lenny? Shout out to you. Appreciate you joining. What's up, Lawrence? Shout out to you too. Shout out to you too. How's everybody doing out there today on this Friday? Hopefully you're doing well. Hopefully you're taking care of yourself. Hopefully you're touching grass because there's a lot going on. A lot of stress I see out there in the crypto world, but we're gonna get through it. Definitely gonna get through it, especially if you're watching my channel. What's up, Carrie? What's up, Donna? What's up, ZZ? Happy faces, boss. Great week for trading. Yes. Shout out to you, ZZ. You're starting to get that experience. You're starting to see behind the scenes what actually goes on in price, not just crypto. But if y'all are interested in signing up to the Patreon, click the link in the description. And I'm gonna go ahead and announce that I'm releasing the signal service. So if y'all go ahead and come over, let me pull that up right quick. I'm gonna go ahead and release the signal service. So if y'all are interested in that, y'all click the link in the description. There's more details on the inside. So come over to my Patreon. The link is in the description. Sign up if y'all are interested in the signal service. I'm gonna go ahead and go live with it. It is pretty much ready. My plan was to do it at the end of June and early July. So I think I'm ready to go ahead and roll out with it. So if y'all are interested in it, sign up for it. We got a lot going on. Just a few, what time is it? 5:33. About an hour and a half ago, we just had Brad Garland House. Let's go over here to X. Brad Garland House. So an hour and a half ago, Brad Garland House posted on X.com, Ripple is dropping our cross appeal, and the SEC is expected to drop their appeal. So it looks like Brad and the SEC, they're coming to a conclusion because the judge, she wanted to not end the case or accept the appeal. So I guess now, I don't have all the details, but this is what he's saying. So he says, as they've previously said, we're closing this chapter once and for all and focusing on what's important, building the internet of value, lock in. And Stuart Alderati, I believe that's their lawyer. Ripple's a lawyer. Let's see. That's all I got for right now as far as what Brad said. Let me see right quick. What did the lawyer say? This was yesterday. XRP community, SEC Gov, Ripple, XRP breaking. Judge Torres denied the party's motion for an indictive ruling. So the judge denied the ruling yesterday. And I'm assuming today, Brad said, to hell with this. We're going to go ahead and we can agree with the SEC. And you already know we got a pro-crypto SEC now. So I'm sure they're ready to get along, get along with this and move forward. So they both decided to drop their appeals. So I'm not no attorney. Y'all let me know in the chat. What's the next step? What's the next step in the process? Because, okay, they dropped the appeal. So now what does that mean for the people that have been keeping up with this? I have not been keeping up with this, but it is breaking news that they're going to pretty much drop the appeal and move forward. So y'all let me know in the chat what y'all think about this. And if you have any insight, what's the next step in the process? Does the judge go ahead and move forward, or does she still stall out? At the same time, y'all see a lot going on with legislation, the Genius Act regulation, companies starting to go live with stable coins. So it's a lot going on right now. At the same time, price is still being continued to be suppressed. That's what I'm an expert in. I'm an expert in price action. So I can't keep up with this all day when I'm sitting here providing my analysis and watching charts all day. That's why I got a network for people that are experts in their lane or have experience in their lane. I'd rather us come together and we join forces and we unite together. Let me see. ZZ, you said bigger news is you releasing the signal service. Good shit, bro. Okay, yeah. Like I said, signal service is ready to go. What we're going to be doing in there, we're going to be in there trading futures contracts. I got instructions. I got tutorials. So if you're interested in signing up, come over to the Patreon. The link is in the description. And once you get inside, we'll go over more detail. You could talk to me directly, etc. So that is live. So if y'all want to go sign up for that, we're going to get into more details. And tomorrow, I believe I'm going to do I want to do something like, I want to do like a little trainer, a free trainer for people who want to learn how to day trade. So right now, prices in crypto, I see a lot of people frustrated. Prices in crypto, they're selling off. There's lack of price action. But as ZZ knows, there's always price action. ZZ, you was blown away earlier this week by the NASDAQ. How the NASDAQ was showing explosive moves, but most people are not aware of this because they're not into this. They're not, this is kind of gate kept. You know what I'm saying? Most people don't know what they're doing. Most people are long-term investors. So as you see every day, there's always opportunity. Today, there was opportunity in the markets, and there's mass potential in learning how to day trade. And if y'all want to come over here, I got lessons, I got signal services, and a community. So y'all sign up for that. Let me get a quick roll call. Y'all shout out where y'all from, city, state, country, region. Let me get a quick roll call. I want to see who all's in the building. Let me get a quick roll call. ZZ, you said you saw thousands vanish in 3 seconds on Wednesday in the NASDAQ. Yeah, man. Yeah, you can. But you already know what I teach. You already know what I teach in the Patreon. We got real strict risk management rules, and we go over that in the Patreon. So if y'all want to sign up to the Patreon, y'all click that link. Who's all in the building, man? Happy Friday to everybody. Happy Friday. Shout out to Daytona, Florida in the building. Shout out to you, Lauren. Shout out to Daytona, Florida. It's a few days into the 4th of July. A few more days into the month ends coming up next week. And we're going to be officially in the third quarter. So the second quarter was a drag. I ain't going to lie. The second quarter of this year was a drag. So going into the third and fourth quarter and the second half of the year, I'm expecting more excitement. We're almost at the finish line. For everybody that's in crypto, we are almost at the finish line. Can you believe? Give yourself a pat on the back for even getting to this point. Getting up, if you've been in XRP and you've been in crypto for years and you've been waiting, and it's been like to see like Ripple. I'm talking about if you go back to like 2019, 2020, and you was hearing these things about cross-border payments, stable coins, algorithmic stable coins. You was hearing all these things, and now to start seeing it come to life, you know what I'm saying? To start seeing it come to life, that's a big deal. That's a big deal. Shout out to Austin, Texas in the building. Shout out to Baton Rouge in the building. Shout out to Florida Keys in the building and the Keys West. Shout out to y'all, man. Shout out to y'all. Appreciate y'all joining on this Friday. You know what I'm saying? Y'all could be doing anything else, but y'all getting this insight today. We're going to come to the charts. Matter of fact, let's go ahead and review some prices. So right now we got XRP trading at $2.13. XRP 213. It kind of popped up after the announcement from Brad Garlinghouse, but I'm going to get into it here shortly. Where I think price is going to go next and why it should go there. But hey, sentiment can switch real quick. Anything positive can spark the hell out of price. So I'm going to give you my analysis here in a minute. Stellar trading at 23 cents. We still got some great opportunities in the market. We got XDC trading at 5 cents. We got HBAR trading at 14 cents. We got Bitcoin, $107,000. Bitcoin holding strong, real strong. Ethereum trading at 2,400. Algorand, 17 cents. Constellation, 3 pennies. I'm going to be I'm load up on some Constellation, man, because I believe they're doing some exciting things. We got IOTA trading at 15 cents. We got ZBEC. What's up with all the noise? Where did the ZBEC crowd go? Just 2 weeks ago, 2 or 3 weeks ago, it was ZBEC. Or even a month ago, ZBEC down. Everything was ZBEC. But now it's crickets. I'm not shitting on anybody holding ZBEC, but a lot of y'all chased this. A lot of y'all jumped into it because of the hype, because of social media. And that's not what smart money does. People, we don't react off of retail logic, retail theory. You know what I'm saying? We don't react off of that. So real quiet right now with ZBEC, and it's just holding right now at less than 3 pennies. We shall see. I'm not knocking ZBEC. If you invested in it, shout out to you. If you made money in it, shout out to you. But I seen a lot of people just flock to it, and they was misled, and a lot of people was buying the high. So I'm sure a lot of people are in the red right now because they chased price. Y'all didn't buy it at a discount. That's my only gripe. Y'all did not buy ZBEC at a discount. Y'all chased it when it went up to a premium, and now you're caught in the, you're either going to sell it at a loss or you're at break even. Okay, so that's where ZBEC is. ICP currently trading at 477. Ondo trading at 74 cents. What's up with Ondo? Where's the Ondo crowd? I only got this up here because that's what y'all told me y'all was into. Y'all told me y'all was into ZBEC. Y'all told me y'all was into Ondo. So where's the Ondo community at? Y'all let me know. 74 cents though. Solana, $142. Flare, 8 pennies. Cardano, 55 cents. And Chainlink, $13. $13. I appreciate y'all joining, man. Shout out to y'all. Let's go ahead and come over here to some headlines, and then we're going to come do some deep analysis. We're going to do some deep analysis. So let me go ahead and come over here. Let me mute the music. So stable coins. We got a lot of stable coin news, Genius Act, all kind of stuff going on. So let's go ahead and get some stable coin news out the way, and then we're going to move forward. I don't want to keep y'all all evening this Friday, but let's go ahead and press forward.
Crypto industry. Last week's passage of the Genius Act by the Senate, the legislation establishes the very first federal framework for dollar-pegged stablecoins. Circle Internet, Coinbase, and Robinhood seeing massive gains around the vote this month. And our next guest says stablecoins will be the currency of the AI revolution. Joining us, Alchemy CEO Nikhil Viswanathan, whose company powers stablecoins for names like Circle, JP Morgan, and more. Nikhil, great to have you with us.
Thank you for having me.
What was interesting was to hear about the companies who are interested in issuing their own stable coins and how the payment processors reacted to those potential stable coins hitting the market. So we saw Visa and MasterCard drop when Walmart and Amazon said they were going to issue their stable coins. How do you see, if you fast forward 5 years, are we going to be dealing with a host of stable coins out there issued by various retailers?
And when I was searching the algorithm before I went live, I was just like trying to collect some videos for this live stream. The narrative is quickly shifting, and it's more utility. It's crazy how they do this. They already knew back months ago that they was going to do this, but the narrative is shifting. I'm hearing more stablecoin chatter. I'm hearing more people starting to use it. So all this shit been in the works. You know what I'm saying? Y'all are almost at the finish line. Y'all continue to push through. You're almost at the finish line. So it's just interesting. All these CEOs and companies and banks, they're starting to implement stable coins, and they're starting to use them. And shit is going to be different. And y'all already know, y'all hold the protocols that power all this. So these investments, Ripple, Stellar, all these internet protocols, these tokens, are powering the back end of this, and most people don't even realize it. So let's go ahead and continue.
Retailers and companies trying to get consumers to transact on their specific stable coin?
That's a great question. So maybe stepping back a little bit, I think the crypto industry and stable coins will evolve in 2 ways, just like the internet industry did. Existing businesses will have their financial systems upgraded, so the banks, the financial institutions, and then you'll see new types of applications that are completely from scratch that were never possible before. And in terms of the stable coins, we will actually see stable coins disappear, and the user experience will just be about moving money from one person to another, and you won't even have to worry about the technology. Well, no stable coins have succeeded when the technology is no longer even talked about.
Give us a sense, for some of the newbies or the normies, whatever you want to call us here, we're seeing all these companies that we know in the financial institutions. They're kind of moving here. They were kind of slow to do so. What do you think the risks are, right? There's going to be lots of different stable coins, and there's going to be B2B applications. There are going to be B2C applications. What are the risks? Because we've seen big blow-ups in the past. Obviously, Tether was one of them.
Yes. That's a great question. I think it's really important to split apart a core technology versus the applications of the technology. If you look at the dot-com bubble, there were several companies that were not real businesses that died, similar to the ICO boom in 2017. I'm sure we will see stablecoin applications that are either scammy or not technically sound that die, but the core underlying technology is very solid, and that's what you saw with the internet. Just because there was a dot-com bubble didn't mean the internet died. It just meant that some of the applications weren't high quality.
From a consumer, I can understand the desire to have a stable coin from a retailer standpoint, et cetera. I mean, the settlement time is going to be reduced. The cost to transact is going to be reduced tremendously. It's going to be crushed, basically. From the consumer standpoint, we are so used to credit. We are really attached to our credit card rewards, and we can easily move money. I could give money to Tim right now via Zelle or Venmo for free. So can you make the case for that application, consumer-to-consumer adoption?
Yes, that's a great question. So the first piece of it is that stablecoins is really an infrastructure technology. In the future, it's not going to be something that
Stablecoins are infrastructure technology. These assets that we're investing in are the infrastructure. If you have not got it yet, which most of y'all have understood that, y'all are in a great position if you hold these digital assets that are the infrastructure. Okay? Y'all are in a great position. I just got to keep drilling at home because y'all are almost at the finish line, and I want y'all to succeed. I want everybody to change their family situation. So I just want to keep implementing that.
People think about, they won't think I'm using a stable coin. They will just be able to move money seamlessly between one person to another. And you're right, you can Venmo someone if they live in the United States and you have their phone number and you have a way to contact them to get their information. However, if you want to send money to someone in France and it's $10,000 and it's Friday night, the fastest way to do it is get on a plane with a briefcase of cash at JFK and land in Paris. So what you'll see is a complete rewiring of the entire financial system built from the ground up that replaces the rails that were built 50 years ago, and changes throughout the experience will be made because of that new technology.
And hopefully that keep y'all motivated. Hopefully that keeps y'all motivated to continue to push through. Let's come up. Let's see what I got next. More stablecoin news. Let's go ahead and see this because, like I said, the narrative is quickly shifting. And if you're not paying attention to it, you might end up selling. So hopefully that's not you. The narrative is quickly shifting. So let's go ahead and continue.
Coinbase stock has surged more than 40% since the Senate passed the Genius Act, a bill that would establish a federal framework for stablecoins, digital tokens backed by assets such as the U.S. dollar. But is it still being underestimated? Julie Hyman down at the New York Stock Exchange with more on what analysts and experts are saying about the industry. Julie.
Yeah, it's been really interesting, the surge that we have seen in anything stablecoin related. Circle shares, of course, have been the poster child for that, right? Because it is the only pure play way to buy into stablecoins. The other main stablecoin provider, Tether, is not publicly traded. So that's why we've seen all the enthusiasm with the passage of the Genius Act that then will provide that framework for stablecoins. But what we've noticed ever since that passed is that it's almost like stablecoins stablecoins are the new blockchain, right? Everybody is throwing out product announcements related to them. Over the past week, we've seen companies from JP Morgan to Fiserv to PayPal make these sorts of announcements. So now, especially with the surge that we've seen in those Circle shares, the question is there indeed sustainability? What is the use case for stablecoin, and what is the future going to be? Now, the Bank for International Settlements yesterday put out a paper that raised some questions about this and actually caused some turmoil in those Circle shares. It basically said stablecoins, quote, may at best serve a subsidiary role here. It says the monetary system can transform into a next generation system built on tried and tested foundations of trust and technologically superior programmable infrastructures. Basically says that the system as it exists can integrate with this stuff, but it probably won't be replaced by it. And that's something that's
Now, how long have we been knowing that? We've been knowing that if you've been in this space for a certain amount of years, we've been knowing this for years, and the media was not covering this. Now here we are about to enter the third quarter of 2025. Who remembers when they thought 2022 would be the year? I'm gonna ask y'all that in the chat. Who remembers when they said, "Oh, 22 was the year," and everybody was hyped up in the crypto market and XRP community, and then 2022 passed, and then everybody started pushing out to 2025. And I remember reading articles and documents talking about like FedWire, FedNow 2025. And I was like, damn, that's such a long time. That's a long time from now. But here we are. We're way past that. And now here we are. The narrative is switching. We've already known that they're not going to completely get rid of the traditional financial system. We've been knowing that it would be interoperable. I struggle with that word too. Interoperable. And they're going to merge the two systems together. Okay? They're going to merge the two systems together. But here we are, mainstream media just now coming to put it out there. Most people not even watching this neither. I look at some of these views from some of these major outlets. They not getting the views like that, okay? They're not getting a whole lot of views. But most people still are not, here it is, 2025. Most people are still not aware of the new financial system being implemented. And they gave people opportunities. So shout out to y'all for being in the know. I just want to keep telling y'all congratulations if y'all been here. If you're just coming to the table, who's new to crypto in my chat? I got 32 people in the live stream. Make sure y'all smash the like button. I only got 9 likes or 8 likes. Please smash the like button. And I want to know who's new to crypto, who's new to investing, who's new to trading. Y'all let me know in the chat if y'all brand new to this. Because you still have some opportunities if you think you're too late. Because as we roll over into the second half of the year and going into 2026, so from now, 2025 to 2030, most people probably aren't going to be able to get the opportunity because prices are going to start moving from now to 2030, okay? By the time we get to 2030 to 2035, a lot of y'all are going to be living a different reality in a financial position, okay? So it's been a long journey, you know what I'm saying? It's been a very long journey. Let me continue.
Some analysts are trying to grapple with as well. I talked to Dan Dolev of Mizuho today, and he called stablecoins the Gen AI of 25. In other words, this is a new technology that there's a lot of enthusiasm about and a lot of money being thrown at, but there's not yet a good understanding of what the eventual effect on industry, on the financial system, the use cases, etc. He is theorizing that it's probably not going to be that much of a consumer-facing product, except in one important use case where we're already seeing it be used, and that's for cross-border remittances, right? In certain countries where you see more volatile currency action, for example, it can be quite useful as a way to send money. We're already seeing that happen to some extent. So he theorized down the road, perhaps you could see it disrupt more business to business than sort of consumer facing. And in terms of what he thinks investors should be doing right now, he thinks that the likes of Visa and MasterCard and PayPal, which have fallen in recent days on concerns over competition from stablecoin, he says investors should get into those names because he thinks that that disruption has for now been overstated. But Josh, I just want to emphasize, there are still just so many questions about this. Even though the Genius Act puts in place that framework, we haven't yet seen a lot of products and a lot of adoption that is out yet for stablecoin in the U.S. And so this is.
And that's because we're waiting for those bills to pass. That's why we haven't seen a lot of products. They gotta pass legislation first. They gotta pass that, and then you already know the flood is gonna be coming. Next, who heard the news about using crypto in mortgages, Fannie Mae, etc.? Did y'all hear that news? Y'all let me know in the chat. Now they're acknowledging that we can use crypto assets for our mortgages. So that's another reason to pat yourself on the back. That's another reason to continue to hold on for dear life, okay? Because these digital assets are going to be, I like to look out into the future. That's why I like to trade futures. I'm a futures trader because I'm always forecasting, projecting out price action into the future. But just looking out into the future, we could see this world where, let me throw some numbers. Let's just do some random math. Okay. Let's just use Bitcoin. Bitcoin is at $107,000 right now. Okay. There's people out there that hold 200 Bitcoin, 500 Bitcoin. There's people out there that have 10,000 Bitcoin. And what do you think those people are going to, those people, let's say the housing market, we have a housing market crash or whatnot. Those people are going to be able to take those Bitcoin and go scoop up all the real estate on the market. Same with other digital assets as well. So if you're in a position right now, let's say for XRP, let's say you hold 10,000 XRP, okay? And let's just hypothetically say XRP goes to $10,000 to $50,000. You're going to be in a great position. You know what I'm saying? You're going to be in a great position to use your crypto as an asset to purchase real estate. So let's go ahead and go over that right quick. 1 second. Let me pull that up.
We're back with some news on the housing front. We'll go to Washington. Diana Olick has that for us. Hey, Di.
Hey, Scott. Yeah, this is from the FHFA director, Bill Pulte. He is the conservator of Fannie Mae and Freddie Mac. He just posted on X, after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world, today I ordered the great Fannie Mae and Freddie Mac to prepare their businesses to count cryptocurrency as an asset for a mortgage. Interesting, in the note, he then has a release from the FHFA, whereas cryptocurrency is an emerging asset class that may offer an opportunity to build wealth outside of the stock market and bond markets. Cryptocurrency has not typically been considered in the mortgage risk assessment process for the mortgage from mortgage loans delivered to the enterprises without converting that cryptocurrency into dollars. So he is now, this is not happening immediately, but he is directing Fannie Mae and Freddie Mac to prepare proposals for consideration of crypto as an asset for reserves in their respective single-family mortgage loan risk assessments. So that means that your crypto can back your mortgages. Now, this is an interesting play because there is actually a startup company called Milo, which already does this, and it's been slowly moving into the mortgage market in that way. Some people buy and sell in crypto on their own. But for Fannie and Freddie to use crypto as a backstop for their mortgages, that's going to be interesting going forward, as we know how volatile crypto can be.
We moving closer. We need them regulations. We're definitely moving closer. Y'all tell me in the chat, I'm not familiar with all the bills, but which bill, I'm asking y'all in the chat, which bill covers the real estate portion of crypto or whatnot? You know what I'm saying? Which bill? Or do they have a bill dealing with crypto and real estate? Is that a thing yet? Y'all let me know in the chat. But as y'all can see, quietly, things are shifting. Right at the end of quarter two, okay? Right at the end of Q2 2025, we're about to enter the second half of the fiscal year. and things are starting to shift, and the narrative is starting to shift as of today. All this shit happened this week. Everything that I'm covering happened either this week or in the past day or two. Okay. We got Brad Garland House and the SEC deciding to dismiss or drop their appeals against each other or whatnot. Okay. We got real estate and crypto, real estate backed mortgages. Excuse me. Crypto backing real estate. Okay. That's what I'm trying to say. Okay. Crypto backing real estate. And then we also had legislation passing, was it from the Senate going to the House? Regardless, things are moving forward, okay? Things are moving forward. Let me see what else I got for y'all. Right quick, and then we're going to come to the charts. Jerome Powell, he pretty much, this also is a big deal. This is the chairman of the Federal Reserve, the biggest central bank. Well, yeah. The central bank of the free world, Jerome Powell, pretty much giving the green light and approval for cryptocurrency and banks to start utilizing crypto and digital assets or services, okay? So he's giving the approval for banks to start utilizing crypto services. So all this shit happened this week. All these things are happening this week, ending the second half of the year, the first half of the year, going into the second half. So let me go ahead and play this.
Sir, Senator Lummis.
Thank you, Mr. Chairman, and thanks, Chairman Powell, for being here today. As you know, what always vexes me and has for the last 4.5 years about the Federal Reserve is the bank supervision function as opposed to the monetary policy function. So I'm going to focus on bank supervision. First of all, I do want to thank you and Vice Chair Mickey Bowman for ensuring reputation risk has been removed from the bank supervision process. It was very arbitrarily used by those who were supervising. On January 27th, 2023, I'd call it the high watermark for Operation Choke Point 2.0. The Federal Reserve Board, in coordination with President Biden's White House, executed a coordinated attack to isolate the digital asset industry from the banking system. And while the Fed has taken steps to adopt a more balanced approach to digital assets, which I appreciate, the legacy of January 27th, 2023 remains with us today. So I'd like you to look at this quote. It says, issuing tokens on open, public, and/or decentralized networks or similar systems is highly likely to be inconsistent with safe and sound banking practices. So my first question is, do you recognize this quote?
Yes, not super clearly, but yes, I do.
Because it's from the Federal Reserve Board's policy statement on Section 913 of the Federal Reserve Act, which was formally adopted by the board on January 27th, 23. So now, Chairman Powell, I want to show you another statement, and I'm sorry if you can't see it clearly, I'll read it to you. It's from the Genius Act, which just passed the Senate by a vote of 68-30 last week. And it takes the opposite position to the board's policy statement on issuing stablecoins on an open, public, distributed ledger. So my question is, what has changed about the risk of stablecoins since the board adopted its policy in 2023? And now that the Congress has weighed in, at least the Senate has weighed in and sent the Genius Act to the House, does the board plan to withdraw the policy statement on Section 913?
So I think what has changed is, if you go back, that's a couple of years ago, that was the period of high-profile failures and fraud and that kind of thing. And what's happened is, I think, the industry is maturing, our understanding of it is improving, and in a sense, it's becoming much more mainstream.
Jerome Powell is full of shit. They know this was in the plans years ago. Who remembers the quote when he said, "We're going to a new we're going to a new digital, we're going to a new system." That's what he was pretty much saying. It was a quote. Who remembers XRP Chiz? That's one of my favorite content creators in XRP. XRP Chiz. He used to play a video like that where he's showing the federal chairman Jerome Powell saying, "Yeah, we're going to a new banking system, a digital system." So that was all a game a few years ago with Jerome Powell, dismissing and denying crypto and etc. The whole industry was, but now it's a beautiful day, and that's another reason to pat yourself on the back again, because you're almost there. You can't realize that we're almost there because you got to you got to reflect on things. You got to remove yourself from all the headlines and negativity and price action, okay? Even though I'm an expert in price action, but y'all got to remove yourself from that and just reflect on where you have been and where you're currently at, okay? So let me go ahead and continue. And then we're going to move on.
So all of us are revisiting, the things that were done during that era. And I think the current view is that, that it's appropriate it's always been appropriate for banks to choose their customers and to be able to undertake activities as long as they're safe and sound. In terms of, I think, I have to get back to you on 913. I think it's a broader thing that has nothing to do with crypto, but that was a piece of it. We are looking at and withdrawing many of our pieces of crypto guidance from that era, though, as you know.
And I appreciate that. I hope that by withdrawing the guidance, that you're also instructing and admonishing your bank's supervisors to when there are efforts to regulate banks that provide too much discretion to bank regulators to pick winners and losers from among the customer lists, the loan portfolios of banks, it's antithetical to the American system of banking. And I do think that there was that kind of discretion unleashed on banks, and it had a negative impact, a real chilling impact on banks as they selected and banked certain industries and then debanked other industries and other people during the last 4 years. So taking the guidance documents and policy statements out is important, but also guiding the people that there are changes now and that they can no longer use their own subjective biases towards DEI and ESG and other things in supervising the banks is also a critical component of bank regulation.
I agree completely. And as you know, Vice Chair Bowman is actually a former bank supervisor, so she's very well placed to make that happen.
And I realize that she as vice chair is more directly involved in bank supervision. I hope that you will use your role to punctuate the importance of those changes with.
Man, that's a drag. But we're going to move on. Let's go ahead and move on. Let's come over to the charts. 1 second. Let me pull it up. Appreciate everybody joining, man. If y'all just joining, smash that like button for me. Subscribe to the channel. My Signal service is live, so if y'all want to come over here to the Patreon, click the link in the description. Y'all sign up if y'all are interested in the Signal service. We're gonna be over there. I'm gonna be providing live signals in the futures market. I got tutorials. Y'all be on the lookout for that if y'all are interested. Go ahead and sign up for it. Let's start off with XRP. Let's come over here to XRP. Let me pull it up right quick. Let's pull it up right quick. All right. It is what today is. Today is Friday, June 27, 2025. This is XRP. This is a 6-month time frame. 6-month time frame. We have 3 days left. 3 days left to complete the first half of the year. Okay, 3 days left. 3 days left to complete the first half of the year. Just being patient. Just being patient. So this is a long-term time frame. On the 6-month time frame, we have a fair value gap that's forming. It's not valid until this candle closes right here. We have a fair value gap forming. If you don't know, if you're new to my channel, price is algorithmic. It is coded to repeat and do certain functions over and over again. So y'all heard me say that many times. If you're brand new, price is algorithmic. It repeats repeating functions, okay? So this is a 6-month time frame. Each one of these candles takes 6 months to complete. So guess what? After a long 6 months, we are coming to the close of this candle right here. We have 3 days left. So in 3 days, let's come to the economic calendar. In 3 days, 1, 2, 3. On Tuesday, we'll begin the second half of 2025. Tuesday will be July 1st, okay? Tuesday will be July 1st. July 1st begins the third quarter 2025. Hopefully y'all following along, paying attention. So we're coming to the end of that. Let me see right quick. Let's come back to XRP. So on July 1st, this candle will close. Well, excuse me, July 30, June 30th, this candle will close. July 1st, this candle will open. And we're going to trade. We're going to have a fair value gap that potentially is formed. I'm going to pull that up. It's a 6-month fair value gap in the form of a BISI. Okay. So this is a inefficiency in price. Do you see this one candle, this large candle? That was an inefficient candle. It only offered buy-side delivery. It didn't offer any selling in here. What's up, Gabrielle? What's up, ZZ? What's up, Ryan? What's up, Lenny? What's up, Lawrence? Appreciate everybody joining, man. Shout out to y'all just joining. This candle right here was inefficient, okay? So once this candle closes, we're going to have a large inefficiency at discount below price. The algorithm is most likely 9 times out of 10 going to want to trade down and reach for this fair value gap, okay? This is avoiding price. If you sign up to the Patreon, y'all get more details on how to find this. I've done it so many times for free on the channel, but if you sign up to the Patreon, you get more insight on why is this a fair value gap? Why am I highlighting this area? Okay, y'all should know that. If y'all been in the channel, y'all already should know. So at the top of the fair value gap is a price level of $1.61. That's the top of the fair value gap. Okay. We go down to the next level, which is the upper quadrant of the fair value gap. That's $1.39. Okay, $1.39. The next level, which is the midway point of the fair value gap, is $1.17. Okay. Now I'm gonna stop right there. I'm not concerned about anything below that point just yet. I just want to highlight the top 3 levels that price can potentially trade down to. We can trade down to the top of the fair value gap and not even come down to these other levels. We can just, boom, come down here at the top, quickly fill in the top of the fair value gap and move away, okay? That's a possibility. Or we can trade down lower to the 0.75 level, which is the upper quadrant, at $1.39, and we can then move away. If we trade any deeper, which is going to scare the hell out of retail. Even trading down from where we at right now. We're currently at $2.13, going under $2, coming down to $1.61. That's going to scare the hell out of retail. People going to be panicking, etc. Okay, but the midway point of the fair value gap is a key level. That's a key level that I'm watching for. Now we're waiting for this candle to close. Anything below the 6-month time frame. The higher the time frame has more influence over price. I'm letting y'all know. So once this candle closes in 3 days, my directional bias is going to be bearish. I'm going to be looking for a price to trade down into this. Also, for y'all that know more advanced concepts, y'all tell me in the chat, what is this right here? This wick low. You see that candle? That wick low. What is that right there? I'm going to reference it with a Fibonacci. We also had these key levels inside of that wick right there that I go over in the Patreon, and I've done it many times on this channel for free. But there's key levels. Once this candle closes in 3 days, there goes more key levels that we can trade down into. Shout out to you, Ryan. That's a ghost pool. There's more key levels to trade down to. Ghost pools, yes. If y'all are new, pay attention to the chat because I got people that been in here and they show up every day. I appreciate y'all showing up every time I go live. So I'm going to be waiting. So when does this? Tuesday. So next Tuesday, this candle will close and a new candle will open. Okay. So we got some days left. So right now, there's nothing to be really concerned about short term and price action. So from the 6-month time frame, let's go down to the 3-month. So what I did was I dropped down to lower time frame, the 3-month. Every one of these candles take 3 months to complete. Okay, every one of these candles take 3 months to complete. On the 3-month time frame, this is the second quarter of the year. So what I'm gonna do is I'm gonna throw up my quarterly shift. This is more advanced. This is a higher time frame tool that I use. All I'm doing is dropping these vertical trend lines, and I'm gonna drop down to the monthly time frame. Okay, so in between every vertical trend line was 3 months price action. In between every vertical trend line was 3 months price action. So right now we're currently, well, what I need to do is I'm gonna adjust it. So what I'm gonna do is I'm gonna take this trend line right here. I'm gonna drop it on the current candle. Slide that over, slide this over, slide that over, slide that over. Okay. So what I'm gonna do is I'm gonna take a vertical trend line. These are free concepts and tools that y'all can be applying to your own charts. Okay. So that's on you if you just sit there eating a bag of chips and you're really not paying attention. This is free analysis that you can be applying yourself. So I'm gonna take a vertical trend line. I'm gonna drop it on the current candle on the monthly time frame. That current candle is June 2025. The next one, I'm gonna go all the way back to June 2024. Let's go all the way back to June 2024. Boom, right there. So that is a year's worth of price action from this vertical trend line. So in between this window was a year to date. So from June to June, okay? June to June. So next thing I'm gonna do is I'm gonna take a vertical trend line back in June 2024. And all I'm gonna do is I'm gonna go over 3 candles. 1, 2, 3. Boom, okay? I'm gonna take another one. 1, 2, 3. Take another one. 1, 2, 3. So what I did was essentially is I divided the years last year into quarters. From June of 2025 all the way back to June 2024, I divided price up into quarters, okay? That's what I did. So in between each one of these vertical trend lines is 3 months worth of price action. That's how long this has been playing out for a year, okay? So I'm gonna take one more vertical trend line and I'm gonna forecast 3 candles into the future. 1, 2, 3. Boom, just like that. So in this space right here, we're forecasting into the future. Next, I want to drop down to the weekly time frame. Okay, and like I said, in between each one of these vertical trend lines is 3 months worth of price action. So I'm gonna give y'all some free game. Free game. What you're gonna do is you're just gonna identify in between each vertical trend line there where you see price. You're gonna just identify the highs and lows. So for example, I'm gonna take this high right here. I'm gonna take a trend line. I'm gonna identify that high right here. Above that high is buy side liquidity. Buy side liquidity is pending orders in the market. Okay, that's pending orders. The market makers leave behind orders in the market. Most retail aren't even aware of this. Okay, so y'all, if y'all been watching, y'all should know. Most retail isn't aware of this. So I'm just gonna identify that high right there. There's another swing high right here. I'm gonna identify that. Now I already got all this highlighted. Matter of fact, let me do this right quick. I already got all this highlighted. I'm gonna save some time. Save some time. And this, when I do my live I'm going to do a live stream just for charting probably tomorrow. So y'all be on the lookout for that if y'all want to learn these concepts. So what I'm going to do is I'm going to just highlight it. So boom. See, all these highs above price was left behind in the market by the market makers. Okay, price is algorithmic. These things repeat over and over again. Price is algorithmic, and they repeat over and over again. So what the market makers do, they always seek liquidity. They're always seeking liquidity. Liquidity is either above the market or below the market, left behind by old highs and old lows. Okay, I go into further detail in the Patreon. Click the link in the description. So let me remove the 6 month fair value gap that we're forecasting that we drop down there. Okay. Look at this low right here. That low was from the last quarter, the first quarter of the year. So the first quarter of the year created a swing low. There goes the swing high right there. Okay. What's up, Hector? Appreciate you joining. So every quarter, they're going to leave behind a swing low, swing high. Y'all tell me in the comments, and this is a weekly time frame. Y'all tell me in the comments, what is this right here? Y'all tell me in the comments, what is this right here? This candle, this bullish candle going in one direction. What is that right there? Y'all tell me in the comments. What is that? I'm going to highlight it. And these things been in my chart for months. This BISI, shout out to you, Daryl. Shout out to you, Gabrielle. It's a BISI, which is a fair value gap. A BISI is another form of a fair value gap. It stands for buy side imbalance, sell side inefficiency. Let's explain what that is. The algorithm only offered buy side delivery, meaning they only offered buying as price was going higher. So what happened was price leaves behind gaps. Okay, price leaves behind gaps. And these gaps are inefficiencies. So what the market makers and the algorithm wants to do is it wants to refer back down to these inefficiencies in price. Why was it inefficient? Because it only offered buying. So what they had to do was come back down and offer selling. And you can see how many times they have referred to this gap right here in price. Boom, 1, 2, 3, and then boom, go higher. On that breakout right there, that took out the old all-time high. And then after that, in the first quarter of the year, price started to just consolidate to end the first quarter. And then we went into the second quarter of the year. And you can see the consolidation and the back and forth doing the same repeating functions. This candle right here, this is an inversion fair value gap that I still have highlighted on the weekly, okay? We've been pretty much trading back and forth from premium to discount, discount to premium, and all we've been doing is seeking liquidity on both sides of the market, okay? But now, as we come to the end of the second quarter, in 3 days, we go into the third quarter in the second half of the year, and we have a larger 6 month fair value gap / inefficiency that is forming in 3 days. So let me highlight that. It is the darker gray area, okay? So price is always going to want to seek inefficiencies and seek liquidity. We also got sell side liquidity at this low right here. So price is always going to want to seek liquidity. So y'all tell me in the chat, institutional order flow is looking very bearish right now. Also, we got a monthly fair value gap as well. Let me highlight that. Monthly fair value gap. So let me just zoom back out. I got a lot going on. Price is pricing. I know this is confusing to some of y'all, but let me hide all this stuff. When I'm normally doing this, y'all probably don't see a lot of this. But I got all these levels on my chart. So if I just zoom out from the weekly up to the monthly, you can see we got a monthly buy side imbalance, sell side inefficiency. Y'all see that? Okay, we traded down into that. And then we got a larger one below price. Okay. Let's go out to the 3 month. On the 3 month time frame, we got a larger 3 month fair value gap. So you see all these fair value gaps stacking together. All it's doing is giving you more confluence. Okay. The 3 month is in the orange. The 6 month is in the gray, and the monthly is in the pink. Okay. So these things are just stacking on top of each other, giving you more indication of what price wants to do, which means confluence. So let me just remove all that. Let me just remember, the higher time frame, the higher the time frame has more influence over price. So although I'm showing you the monthly and the 3-month fair value gaps, I'm going to be wanting to watch for that 6-month fair value gap in gray that is forming in 3 days. Okay, so just know that. Just know that. So I'm leaning to bearishness. I think we can come down and work more inside of this discount, and also we got some liquidity left behind in price. Okay, we got some more liquidity left behind in price. So my bias going in to enter the third quarter is bearish. My bias is bearish, and until otherwise. Now, as an analyst, we can always adjust. Okay, we can get it wrong as long as you know how to adjust. So I'm gonna be transparent. Like, if I'm wrong, I'm wrong. All I'm gonna do is get in sync with price, get in sync with order flow, and adjust. But right now, I'm bearish. That's what you have to do as an analyst. If you want to learn how to be an analyst and trade and predict price and forecast price, you have to be able to adjust on the fly. I'm not out here trying to prove if I'm right or wrong. It don't matter to me, okay? It doesn't matter if I'm right or wrong. As long as you're on the right side of institutional sponsorship. That means when smart money comes into the market, your money, you're in sync with their money, okay? That's what I'm trying to say. You're in sync with what smart money and institutions are doing, because retail has no influence over price. Retail cannot drive price. Retail can't do nothing with price. Okay, this back down to the monthly. Now I want to go to the weekly. On the weekly time frame, we are in a inside range week. So we didn't take out so far this week. We didn't take out the previous week's low, nor did we come up and take out the previous week's high. That's where liquidity pools are. That's where pending orders are in the market. Price always seeks liquidity, okay? Y'all should know that already. Price always seeks liquidity. From the weekly, let's go down to the hourly. I want to go down to the hourly. So anything below the daily time frame is no longer a long-term chart. Anything below the daily is a inter-week, inter-day chart. So I'm going to get a closer look at price right quick. Let's come down to the hourly. I'm going to go pull up my weekly dividers. Okay. And as you can see, we got last week's high. And then we took out last week's low. So right now, we're just ranging back and forth. Now, if I throw up those higher time frame PD arrays, for example, let's pull up the 3-month. Let's pull up the monthly. Boom, right there. Okay. So do you see that monthly fair value gap at discount? You see the monthly fair value gap? Do you see how last week we traded down into that? Okay, we traded down to the discount and price displays back higher, back up to a premium level. Let me pull up those weekly fair value gaps. Boom, you see that? We're still inside the weekly, but we're respecting the monthly. So do you think it's random that price is using these levels? And let me do a split screen to give y'all more insight. Let's do a split screen. On the left side of my screen is the hourly. On the right side of my screen is the monthly. Let's go out to the monthly. Okay, let me hide some of this. So the right side of my screen is the higher time frame. On the left side of my screen is the lower time frame. So let's zoom in on the right side of my screen. This is a monthly time frame. Look at the current month, which is June. So what did we do so far this month? We opened up, we went higher, and we traded down into this monthly fair value gap in pink. So that's what it looks like over here on the left. Us trading down into that. And then you see how price, after it trades down on the right, how it trades down into the fair value gap, it starts to move higher. Okay, that's what it looks like intraday over here on the left. We traded down into the fair value gap, and then it starts to move higher away from the fair value gap. Okay, so the higher time frame has more influence over the direction in price. That's what I'm trying to get y'all to understand. So back over here on the right side, the higher time frame, the past 1, 2, 3, 4 months, they've been consolidating price. Okay, they've just been consolidating price sideways. That is very dry. That is not exciting at all. As matter of fact, if you're a trader, you have to become a scalper. You can't just be in there trying to day trade or swing trade, etc. You need to become a scalper because price is very volatile when you see this consolidation like this. So when we had an exciting first half of the year back in January, we took out the all-time high. After taking out the all-time high, they retraced price back down and consolidated price, waiting for the second half to end. I mean, the second quarter to end and for us to enter the third quarter of 2025. So that's all we've been doing. After taking out the all-time high back in January, we just been waiting around for the third quarter. We just been waiting around for the second half of the year. So it's going to be interesting here in the next few days once we cross over into the third quarter of the year. But as you can see, I have these highlighted areas at discount. I am bearish on price as of right now. We need sponsorship. We need institutions to come in to give an indication where they want to drive price. And I show y'all how to do that in price action. So that's XRP. Let me see right quick. It is the end of the week. Pull that up. And right now we're just consolidating, man. We're just consolidating, not exciting at all. So once this week ends, I'm going to highlight this low right here. So let me go ahead and highlight that for y'all. I'm going to show y'all what that looks like. I'm going to highlight that low. That's sell side liquidity. That's the low of the week. Boom, right there. Sell side liquidity. Remember, price always seeks liquidity. Every week, it does not stop. Sell side liquidity. And I'm going to go ahead and say this is the high of the week right here. I'm going to say that's the high of the week right there so far. So I'm going to go ahead and highlight that. Now, the week is not over. It ends tomorrow. So we could drive up into that. We shall see going into tomorrow. So I'm identifying the buy side and the sell side liquidity. And then I'm going to go ahead and set up my charts for next week. So what I'm doing is I drop these two vertical trend lines from Sunday to Sunday. And that gives me an intra-week perspective on the direction and price. So from Sunday to Sunday midnight, Sunday 12 o'clock midnight to Sunday 12 o'clock midnight. Boom, just like that. So now we're just waiting for the upcoming week. It is Friday. Right now, price is retracing down. What time is it? We're about to enter the Asia session on Friday. So let me highlight this 1 hour fair value gap, which is a BISI, buy side imbalance, sell side inefficiency. And price is pretty much stalling out right now. So it's been a dry week. It's been a dry month. It's been a dry quarter. So in the meantime, since price is so dry with crypto right now, and how do you know that? Let me just zoom out. If you go back out to the monthly time frame, okay, you want to get a higher time frame perspective. You want to get a higher time frame analysis, okay? And then when you go out to the higher time frame, you get a above ground view of price, okay? So you can see the last couple months just consolidating sideways. That's very dry. So in the meantime, there's other things to be doing in financial markets. It's not just about crypto. It's just about holding long term, okay? We're not just holding long term. I mean, we are holding long term, but if you're burnt out and you need some extracurricular curricular activities to do, y'all come over here and sign up to the Patreon. Okay, my Signal service is live. It's interactive. It's kind of going to teach you how day trading works. Okay, if you're not familiar with day trading, it's going to teach you how to get started. Also, I got beginner lessons if you want to learn some of these concepts as well. So y'all come over to the Patreon because of the markets are real dry. Crypto markets are real dry, but the traditional markets are not boring at all. They're always fun. They're always exciting. There's always opportunity while y'all are waiting to be making extra money. If you want a side hustle. Yes, Gabrielle, there's live. We're going live with it. If you want to be making extra money, Lenny, you said if this week's inside range, should we expect explosive week next week? Yes, Lenny. You know why? Because next week is the end of the month and it's the beginning of the new month. And let's go ahead and look at the economic calendar right quick. Let's go look at the economic calendar. I almost can guarantee they got a lot of high impact news. So next week on the economic calendar, we're ending the month, we're ending the quarter, we're going into the second half of the year. We have an inside range week. Okay, that's 4 things out of name. Also, look at the high impact news. Tuesday, we got Jerome Powell speak. ZZ, he knows. The people in the Patreon know whenever Jerome Powell speaks, it's a glitch in the matrix. It's a real glitch in the matrix. Whenever he speaks, the markets become very volatile, distorted, and manipulated. It's not random at all. These markets are 100% controlled and manipulated. Okay, y'all. Trying to tell y'all got to get into the Patreon to understand. The markets are 100% controlled and manipulated. So he speaks on Tuesday. Expect volatility. Also, we got PMI data. On Wednesday, we got ADP, non-farm payroll. So on Wednesday, whenever we see a week of non-farm payroll, we don't trade after Wednesday, the New York session, okay? That's a protocol that we use. We don't trade after Wednesday. We don't trade after Wednesday after the AM session because Thursday and Friday is a bank holiday, which is the 4th of July. So that's going to be a very light week next week. So I will provide signals, but if you don't want to go ahead and just jump the gun, or you just want to go ahead and get in there, y'all can go ahead and get in there. But this week right here, we're going to tread real lightly because there's going to be a lot of booby traps in the market. There's going to be a lot of booby traps in the market going into next week. And Friday is a bank holiday, the 4th of July, okay? So definitely stay out the way because of volatility. So with that being said, Lenny, yes, going into next week on the weekly time frame, you can expect the upcoming candle to be very volatile. It can go up and take out buy side liquidity, and it could come down and take out sell side liquidity. It's going to be a very volatile week next week. So tread lightly in the market. So hopefully that answers your question. But like I said, I'm going live with the signal services. I think it's going to be fun. I think it's going to be interactive. It's going to be fun. I teach y'all risk management. So we're not going to be in there just gambling. No, you're going to be in there taking risk management. You're going to learn. I think it's going to be a learning lesson for a lot of y'all. So I look forward to it. So if y'all are interested in this because of crypto right now, if y'all need the extra cash, if you need a new skill set to learn, sign up to this Patreon, sign up to the signal service or my beginner lessons. But markets are real dry right now. I think they're going to continue to be dry. I'm expecting another sell-off in the market. So you might want to go ahead and position yourself with extra capital for that when the time comes with that extra sell-off. When that sell-off comes, position yourself with extra cash to be able to scoop up digital assets or any asset that you choose when the time comes. I'm telling y'all that I'm bearish on XRP. I'm bearish on crypto in the short term. I'm expecting price to come down lower, and there's going to be a lot of opportunities. So why not have the extra cash ready, available to deploy if you're in the futures markets trading? Okay, so that's XRP. Just boring right now, just real boring, not exciting at all. If you come over here and look at what I had right quick, let me see. For example, the NASDAQ. Okay, look at the NASDAQ. And we've been in there trading today, this week. But the NASDAQ, as you can see, look at the NASDAQ just continuing to go higher. And this is the futures contract, September contract for the NASDAQ. But do you see this right here? Market maker buy program, expansion every day. So to be honest, if you understand basics of price action and you see that price is going bullish like this, every day could potentially just be you set a limit order to go long. Not every day, but for the most part, you set limit orders to go long. You continue to be bullish, and the NASDAQ has been very rewarding. So we're going to be trading the NASDAQ while crypto is taking a little pause right now. We're going to be in these other markets trading the NASDAQ. So let me come down to the lower time frame. So this is what I was doing today. I went long and expecting price to go higher today in the NASDAQ. But at the end of the day, if you don't know, I got a protocol. On Fridays, I don't trade after the AM session. So let me go down to the 15-minute. Let's go down to the 15-minute time frame. So this white vertical trend line right here. Okay, y'all see that? That white vertical trend line, that is 12 o'clock midnight. Okay, that is 12 o'clock midnight. So I waited for the New York AM session. And we're going to get back to crypto here in a minute. But I'm just trying to tell y'all, there's a lot of opportunities in the markets every day. It's not just about crypto. So from 8:30 to 11, 8:30 in the morning to 11 in the morning. Okay. That's what I'm focusing on right here. You see these two vertical trend lines that are red or burgundy? That's the window in opportunity. That is from 8:30 in the morning Eastern Standard Time to 11 a.m. Eastern Standard Time. Let's go down to the 5-minute. So early in the morning, the market opens at 9:30 a.m. The market opens at 9:30 a.m. Okay. So the market trades down lower. That's a false move. That's a false breakout. I'm sure a lot of people was in there shorting that. Even people in the Discord, they was in there shorting that. Price dropped all the way down and liquidated the London session low. You see this low right here? The London session is from 1 a.m. to 5 a.m. Do you think it's random? You see that low right there? That liquidity pool from London session, price drops down there and sweeps that low. Do you think it's random that price sweeps that low right there? And then automatically reverses and then goes long just like that. So let me show you my executions right quick. Let me see. What I want to do is I'm going to show you my market executions. So this is what I did today. This is market executions from my account. Okay. So after price goes down there, sweeps that liquidity pool from London session. Do you see where it has the arrow right here? That's my execution. That was a buy order. You see that? It says buy. How do I know that? How do I know the market is going to sell down there? And I know how to get long twice. I think the first one I kind of like, my stop loss was kind of tight or whatnot. But I got long twice. And then the market starts to move higher. Okay. Expansion higher. I had 6 contracts on. This is a micro. So I'm trading the NASDAQ micro contracts, which are affordable. Okay. They're affordable for retail. I'm trading the micro contracts. I put 6 contracts on and price went higher. After the AM session, it created a high. That's when you find your previous session highs and lows. So what I did was I was holding on to this. Okay. And then we crossed over into the lunch hour from 11 a.m. to 1:30 p.m. And eventually I killed the trade because I started to see it starting to show weakness. And what I was doing was I was holding. I normally should have been out. On Fridays, I should have been in this and out of this by 11 a.m., which I should have, okay? But I wanted to hold it a little bit to aim for buy-side liquidity. This high right here is the previous all-time high for the NASDAQ. I wanted to hold it for the all-time high. But the market on Fridays, it likes to go dead at the end of the day. And what I did was I killed it right here in profit because guess where I bought it? I killed it in profit down here. Well, I entered down here and I killed it in profit up here, right there. So I purchased and sold right here in profit. And then luckily I got out just in time because look what the market does. Sells off just like that at the end of the day. And then eventually goes back up. So that's a Friday for you, but you don't need the entire day. You just need pretty much the AM session or whenever time of the day you feel like it. You could trade just during the AM session. You can trade during the London session. You can trade during the lunch hour. You can trade during the PM session. You can trade during Asia. Okay. You don't need every session. This session alone right here would have been enough. AM session. So, and as you can see, me doing other trading, look at all my executions on these other days. Look at my other executions on these other days. I'm in here scalping. Back and forth, scalping. Okay, so that's what we're going to be doing in the Patreon. That's what we're going to be doing. We're not going to be so tired. And it's going to be fun. Y'all going to kind of forget about, crypto. You're not going to forget about it. The goal is to stack cash in futures trading, stack cash, and then convert that cash into assets. Okay. That's the whole purpose of trading. You're trying to build up your equity and then invest that equity. So while crypto works itself out, because we're waiting on legislation and bills, etc. While crypto works itself out, we're going to be having fun inside of the Discord and the Patreon. So y'all click that link in the below. Sign up if y'all ready for that. I will meet y'all in there once y'all get inside. There's more details inside. So y'all definitely be on the lookout for that. Let's see what else. Let me see. H-bar. So I'm gonna give y'all some signals right now for y'all. Y'all just hanging in here. We're gonna give you some crypto signals. So this is H-bar. Let's go out to the 3-month time frame on H-bar. Okay. H-bar right now at a prime opportunity. Once I get off this live stream, I'm gonna go accumulate some H-bar. I had a good day, good week in trading. So why not convert some of that into some digital assets that are at a discount? And H-bar is at a prime opportunity right now at 14 cents. As you can see, you want to be a buyer. You want to be a buyer of the market when price trades down, just like that. You don't want to be buying when price goes higher. You want to be a buyer when price goes down. Okay. Understand that. That's basic information. Write it down, take notes. In your mind, if you don't know nothing about technical analysis, tell yourself, I want to be a buyer when price goes down, okay? And then sign up for the Patreon for the beginner lessons where I teach y'all specific levels in price where to be buying assets at. For example, as price goes down, we have a 3-month fair value gap right here. And matter of fact, let me zoom out right quick to the 6-month. Let's go out to the 6-month time frame. Okay, here in 3 days, this candle will close. It's going to be very interesting. We have a inversion fair value gap right here. So we got an inversion, 2 inversions right there. I don't have it highlighted, but I'm referencing it on the 6-month. But I mainly like how the 3-month time frame looks. So on the 3-month time frame, we got a BOSSI, buy side imbalance, sell side inefficiency. Anytime price trades down into this, it's offering institutions, smart money, an opportunity to buy. Retail is not aware of this. Retail has no idea about these inefficiencies and how they work. And as you can see, we're hanging out inside of that. H-bar had a great opportunity right now. Let me take a peek at the monthly. Yeah, on the monthly time frame, we're waiting for that 3-month candle to close. So it closes in 3 days. And then we will begin the 3rd quarter of the year and start July. So we can come down even further. Anytime we hang out inside of this gap, price could potentially offer a deeper discount. So that'll be a great thing if it comes down to the midway point of the gap to offer 11 cents. I definitely will be in there for H-bar. So these are my signals that I'm giving y'all. XDC down at fair value gap, currently at 5 pennies. See this BOSSI? Okay. Buy side imbalance, sell side inefficiency. Is it random that both of these charts look similar? I don't think it's random at all. You know what I'm saying? I think these things are coded. And I'm also expecting XRP to come down eventually as well. So if you don't have enough XRP, we're definitely going to be highlighting that, waiting for that. So you see it trading down. This is another signal that I'm providing to y'all for free. I'm telling you, this is what I would be doing right now. When I get off this live stream, I'm going to be throwing capital at these cheap assets at a discount. We don't want to be buying when price goes higher. We want to be buying when price comes down to us, to our targets. So while we're hanging out inside of this fair value gap, I'm going to be pulling the trigger. So y'all should be opening up your crypto exchanges, and hey, perfect opportunity. What else I want to look at? Let's look at DAG. DAG is another one. It's not quite down to its 3-month fair value gap, but damn it, it's at 3 pennies. But I'm expecting DAG to come down a little bit lower in the next couple days in the third quarter. I'm expecting it to come down to another fair value gap. I'm going to be expecting to purchase this. But you can't even complain with 3 pennies, but it'll definitely be sweet to come down to 2 pennies. 2 pennies and 1 penny. So I'm going to be looking out for that as well. DAG, DAG, Constellation. Let me see what else. XLM. It's not quite at a discount that I like. I think XLM has more work to do. I think it can come down a little bit more. Okay. I think XLM can come down a little bit more. So be on the lookout for that. On the 6-month time frame, let me see right quick for XLM. There's a 6-month volume imbalance. Boom, right there. That's a volume imbalance. I believe XLM can come down a little bit more. Let me go down to the 3-month. On the 3-month time frame, we're trading down inside of this 3-month fair value gap. So do I have that highlighted? Let me see right quick. No, we got a 6-month fair value gap. And then we got a 3-month fair value gap. Boom, right there. 6-month and 3-month fair value gap. So you can see on the 3-month fair value gap, we trade down into that, the top of it. If you wanted to set a limit order, it's okay. Every time it drops down to that. But I think XLM has more work to do. I think it can come down lower. I'm going to be looking out for it as well. But you can see it trade down into the top of the 3-month fair value gap right there. And then it worked the upper quadrant. So if I lay a Fibonacci from the high down to the low, right there, you can see price trade down inside of the fair value gap or the inefficiency, and smart money accumulated in there inside of that, and then displaced a little bit higher. And in 3 days that candle closes, but I don't think it's done. Once the next candle opens in 3 days, I'm expecting XLM to trade down a little bit more and dig down inside of that 6-month fair value gap again as well. So there's going to be great opportunities. That's why I'm trying to tell y'all, start learning how to trade futures, Forex, whatever. When I first started trading, I started in Forex, and then I was introduced to futures. At the end of the day, price is price. This analysis applies to all asset classes, but futures trading is a beautiful market, and that's where it's at, to be honest. That's where it's at. Let me see what else. Any suggestions? Is there any assets that y'all are interested in? Any assets that y'all are interested in? And it could be in any market, any assets that y'all are interested in. It could be any market, stock market, gold, crypto. Let me look at the dollar right quick. Let me go look at the dollar. Let me go pull up the dollar. A second. Pull up the dollar. So as forecasted, if y'all just joining, I've been calling for the dollar to go lower, and we hit a key level. And y'all tell me in the comments, is this random? Now I've been talking about the dollar for a while now, and I've been wanting to see it sell off. Whenever it sells off, that's a risk-on environment But as the dollar sells off, y'all see me highlight this order block right here. Y'all see me highlight the order block. I said I wanted to see price come down to this level. And do you think it's random that it trades directly down to that level? Now, we're not done, because we also got other key levels below price. So the dollar is selling off right now quietly. Nobody's making a fuss about it. Nobody's talking about it. Even the war, y'all notice the war element is out of here by now. So that's just crazy to me. They really try to scare us with World War III, but now that shit is over with. And now we're on to the next thing. You know what I'm saying? The news cycle is crazy. So we're on to the next thing. So let's see. Opening 97391, 979311. So that right there is the opening price of the order block. The opening price of that candle right there is the top of the order block. Is it random that we trade down to that? Is it random that we trade down to that? And we close this market in 3 days. So here in 3 days, we start the second half of the year. And I want to see, I believe the dollar is coming down lower. So, how far can the dollar go? Well, my next level will be this 6-month fair value gap inside of this order block right here. Okay, that's my next level. If we push down lower, okay, that's the next level that I'm looking for. So the dollar is about to be very bearish, and I'm going to be watching for this fair value gap down here. Also, if we get really crazy with the dollar in the upcoming year or two, we have liquidity resting below price right there. Sell side liquidity, pending orders. Also, we got this large fair value gap right here for the dollar that we can potentially possibly trade down into. Now, this is going to take a long time. This is going to take a long time to play out. You said the war about to fill all those gaps later. Are you? Y'all update me on the war. I haven't been tapped in. Is Iran still upset, or are they calmed down yet? Is Iran upset, or have they calmed down yet? Y'all tell me in the chat. Are they upset, or have they calmed down yet? Hector, what are you talking about? Render? Is that a stock? Y'all let me know what that is. If so, if that is a stock, tell me the ticker for it. Tell me the ticker for it. But if anything pops off, Render crypto coin, I'll look at it. I'll check it out, Hector. I'll check it out. I'm bearish right now on the dollar. We finally broke a long-term consolidation. So, for example, the dollar was consolidating for about 3 years. See this sideways price action? Consolidation, that lasted for years. And now we're starting to break that, and price is starting to sell off and come down lower. So, how far do we go? I need to see this candle close in 3 days right here. I need to see this candle right here close in 3 days. And then once we cross over into the second half of the year, I want to see how we open up, let's say in the first month. I want to see how the first month of the third quarter trades. That's going to give me more insight on the dollar. But right now, I'm bearish on the dollar. We have fair value gaps, and we got liquidity resting below price. So definitely going to be looking out for that. Let me see right quick. Also, the Dillon range. So if I take a Fibonacci from this low right here up to that high, I went over this a few live streams ago. We was up here above the midway point of the fair value gap. We was in that premium market. Remember, we short at premiums, we buy at discount. So we was at a premium, and price started to show weakness, and that's exactly what we got. Now the dollar is at a discount. Now, interest rates play a factor, and who comes to say today to start buying a dollar? Also, the stablecoin element, the stablecoin factor. Does that play a significant impact on the dollar's, the strength or weakness on the dollar? I'm trying to, we got a lot of narratives going on. So whenever the stable coins release, does the dollar show weakness? Y'all tell me in the chat. If the stable coins go live and people start utilizing stable coins on a day-to-day, does the fiat dollar start to show weakness? And do they start printing money? Whenever the dollar goes lower, they're printing money into the economy. So those are factors. Them starting to print money, stable coins going live, all that has an impact on the dollar and the direction of the dollar. So we shall see. But right now, it's a risk-on environment. I am bearish on the dollar, which means that's a risk-on environment for like gold And we're going to be trading gold as well. Y'all sign up for the Patreon. We're going to be trading gold, silver in the futures markets. Pull up gold. Gold kind of showing weakness right now, but it's bullish. When I say weakness, I'm looking at the current candle, but it's definitely bullish and it's out of here. You know what I'm saying? It's definitely out of here. Silver, let's go look at silver. Silver is out of here. Not quite yet, but it's on its way up. Definitely on its way up. And we're going to be in there trading silver futures contracts as well. Got a request, render. What's the ticker? I'm just going to type it in, render. Tell me what is render? Y'all tell me in the chat. What is render? Is that I'm not familiar with that one. What does render do? RNDR. Appreciate it. RNDR. What do they do? What are they known for? It's on Gemini Exchange. I'm going to look at the RNDR USD pair. So I'm going to look at that one. Oh, AI? Crypto AI? This AI takeover is crazy, man. This AI takeover is crazy. So render, it hit the market back in July 2021. You said they're doing something with GPUs. That's interesting. Are they working with NVIDIA? So they hit the market back in July 2021. It is currently trading at $3.14. The all-time high previously was $14. So coming off a high of $14 down to discount. Do you think it's random? Y'all tell me in the chat. What is this right here? It's an inefficiency, but what kind of inefficiency right there? And you tell me if that's random or not, or if that shit is algorithmic. You tell me in the chat. Tell me in the chat if that's random or algorithmic. See it offering a discount, and also it's down inside the order block. See this down close candle? That's also a order block. You say you don't think they have any big partnerships? I could be wrong. It's a ERC20 token. Oh Lord, you already know. But shout out to you if you investing in it. It's at a discount. It's been around since 2021, so it's not. It got some years on it. We shall see. You know what I'm saying? Shout out to y'all. But it's at a discount. So whoever asked me about render, I'm telling you now, it's at a discount. I don't know where you bought at. I don't know if you've been holding for a long time or if you're looking to purchase. But right now, if I was to hypothetically purchase this, it's at a discount. So that's that. I'm looking at the top of this candle right here. That's a order block. That's a bullish order block. If I take a Fibonacci from the opening down to the low, okay, what I did was I took a Fibonacci from the opening price down to the low, and y'all should know that the midway point, see this down close candle, the midway point of the order block is significant. That's called the mean threshold. Okay, that's the mean threshold, the midway point of the order block. That's called a mean threshold. So do you think it's random? Do you think it's random that price trades directly to the midway point right there, boom, and reject that? Or is that algorithmic? Y'all tell me in the chat. Is that random or is that algorithmic that price will trade directly to the midway point of the order block and then reverse and go back inside of this fair value gap? And now we're just currently hanging out just below the midway point of the fair value gap. Who was buying down here? Do y'all take in consideration, and this applies to all markets, do y'all take in consideration who purchased right here? Somebody in these markets purchased right here, and now they're currently up in profit as price starts to move away from the discount. You want to be a buyer at discount. You want to be a seller at premiums. Okay? So who was in there purchasing right inside of that order block? I don't think that's random, but that's render. It's at a discount. Shout out to you if you purchased this or you're owning it. I don't own any. I'm not interested in it. I can't be in everything, but shout out to y'all who are in it. Let me see what else. And if y'all just joining, man, smash the like button. If you just come to the channel, please subscribe to the channel. You know what I'm saying? Also, check it out. Let me do this right quick. Let's do this. Go to my YouTube channel. 1 second. All right, come to my YouTube channel. So let's come over here. Twitch. I am now on Twitch. Well, I haven't done a live stream on Twitch. So if y'all just joining, I'm gonna be doing some streams on Twitch. Twitch is the wave, you know what I'm saying? It's the wave. I'm not in no popularity contest, but you know what? You know what's on Twitch? There's not many people on Twitch doing technical analysis, crypto talk, none of that. So I might start going over there on Twitch. So if y'all want to follow me on Twitch, there goes the link. Click the link in the description on my main page and subscribe to me and follow me on Twitch. Okay? Let me see if I can go to my channel. Twitch is interesting, man. Twitch is very interesting. I'm still creating my page and my channel. So if y'all want to go over to Twitch, y'all sign up for Twitch. Y'all follow me over there on Twitch. Bossman TA. You know what I'm saying? Bossman TA. I'm going to be over there doing some live streams. I'll probably mainly be doing straight technical analysis, not so much news, etc. So y'all go over there on Twitch. I think it's a fun place to be on. They got a lot of people doing IRL. So if y'all don't know, streaming is the wave now. Streaming is the wave. Like, streaming is paying. I've seen rappers and entertainers. They no longer want to be rappers and entertainers. Rappers and entertainers want to be streamers now. So they don't want that rap money different. Those 360 contracts, you know, hey, they don't want them contracts no more. They want out the rap game. They want to start being streamers. So luckily, I'm not a rapper. I don't desire to be no rapper nor no entertainer. But this right here, this skill set, more people need exposure to learning how to do technical analysis and trading. Okay, so y'all sign up, follow me on Twitch, help me get my subscribers up and whatnot. And then if you're new to my channel on YouTube, subscribe to my channel on YouTube. Let me see what else. Any other suggestions or any other assets y'all want me to look at before I head up out of here? Because right now the markets are real dry. I'm not even excited about crypto at the moment. I'm well positioned because I've been in this early. I'm well positioned. But right now, price is just stagnant. We're waiting for the second half of the year. You better believe it's going to be more excitement once we cross over into about the fourth quarter. I'm going to say give it to the fourth quarter. So in the meantime, that's why I'm trying to get y'all to understand how to trade futures. Tesla. Okay, I'll pull up Tesla. In the meantime, I want y'all to learn how to trade futures. You see all this on my chart? This is me today trading, etc. Doing an analysis. Y'all go sign up. Click the link in the description. Subscribe to the Patreon. Subscribe to the Patreon. If you already subscribed, get into the Signal service. Let's go pull up Tesla. Pull up Tesla. Talk about some stocks. Let me see right quick. 1 second. Let me pull it up. Open. It's not opening for me. What the hell? 1 second. Oh, there you go. Stock matrix. And let's go look at some stocks. You said, thanks, bro. This chart has me stuck. What you talking about? It's an illusion. You talking about Tesla? Tesla got you stuck? Tesla. Boom. Let's pull it up. All right. Tesla currently trading at $323. What you want to do is, it's an illusion. You want to zoom out. And these stocks are just like cryptos. If y'all don't understand, like, these things are long-term. Stocks are not something you trade every day. This is nothing you trying to swing trade. Stocks are long-term investments, okay? So these charts play a long time. These things take a very long time. So what you want to do is you want to go out to a 6-month time frame. That is it takes 2 of these candles to complete 1 year. So on the 6-month time frame, what I'm doing is essentially I'm looking for inefficiencies, looking back in price. So I want to see the history and I want to look at old data. And what does that mean? As I look at old data, well, the first thing that pops out to me is this large candle right here. Y'all tell me in the chat, what is this large candle right here? What is this large candle right here? I'm going to keep telling y'all till y'all drill it in y'all subconscious. What is that large candle right there on the chart? What is that large candle? Nobody knows. Nobody knows. So that is a BISI. That is a fair value gap in the form of a BISI. No, it's not an order block. Get in the Patreon. Get in that damn Patreon. It is a BISI. Now, I don't know what the hell going on with my charts, but they kind of lagging. I guess my internet is acting up. But anyway, that is a fair value gap in the form of a BISI. Buy side imbalance, sell side inefficiency. That is a fair value gap. Okay. So what I'm doing is I'm going back in price. This formed back in 2020. Wow, that's amazing. Like during this time in 2020, the beginning of the pandemic, 5 years later, Tesla is going crazy. So back in 2020, price formed this fair value gap. And then eventually the algorithm referred back down to it. You see that? They sold back down to the fair value gap. Inside of it is the midway point, excuse me. I'm all over the place. I had a long day today. But inside of it is an opportunity to purchase at discount. So back in 2022, the algorithm decided to return back down to the fair value gap and it went directly to the midway point. Again, I'm going to ask y'all, is that random or not? Price goes back down to the midway point, offers you another opportunity to accumulate at around $124, $120. It created a low of $101. So back in 2023, January 2023, you could have purchased that at $101. Okay. And remember what I said, y'all want to be a buyer when price goes down. You want to purchase when price goes down. You don't want to be purchasing when price is moving higher. You want to wait for that downward movement. And the same is said for when you're selling. You want to sell when the market is going up. You want to take profit when the market is going down. Or you don't want to sell a market when the market is going down. You want to wait for it to go up. That's what I'm trying to say. So you can see the market trade down, offer a opportunity to purchase at discount, and then displacement higher. And we moved away. Now we're far away from that 101 level, and now price is at 323. Now, it is currently not, if you look at it from this perspective, it is not at a discount. It's at a premium. But inside of this candle right here, see where my cursor is? Inside of that candle, if I go down to lower time frames, from the 6 month down to the 3 month, from the 3 month down to the 1 month. But there you go. Inside of that 6 month candle that I showed y'all, you can find, what is this in the chat? You can find opportunities as you start to zoom in to lower price action. Y'all tell me what that is right there. So on the 6 month, no, price is at a premium. But on the monthly time frame, price is at a discount. So right now, Tesla at 323 is the new discount. That is the new discounted opportunity to look for opportunities in the market, okay? You can see how we traded down into this BISI / volume imbalance. We trade down into it. We could trade through it as well. Like it's okay for it to trade through it. And then we trade back inside of it. And now we're just hanging out at the upper quadrant inside of this discounted fair value gap. And what they're doing is they're holding price. You already know it's not just crypto that smart money is accumulating. They're not just in there buying crypto. They're also buying up these damn stocks as well. They're buying up these stocks as well. Tesla is at a discount, as you can see. So go back out to the 3 month. I need to get a better look at the 3 month. On a 3 month time frame, after dropping down to the 6 month fair value gap, it displays higher. It created this down close candle right there. Matter of fact, it created this one. When you see multiple order blocks, you want to select the larger one. Take that down in your notes. When you see multiple order blocks, you want to select the larger one. So this down close candle right there, I'm going to take the opening price. Okay. Take the opening price and I'm going to drag it out to the right. So every time price dropped down inside of this order block, that was an opportunity to purchase. And as you can see from right here, this point right here, price displaces higher. And it retraces back down and gives you multiple opportunities to buy stocks, Tesla stocks. 1, 2, 3, boom, displacement higher. So that's Tesla. Is it done? Does it want to come back down here lower? Possibly. But right now, if you drop down to a monthly time frame, it's currently inside of a discount. So You want to stick to the higher time frame order flow. Right now, order flow is high resistance. High resistance, a high resistance buy side program. A high resistance buy program. That's what I'm trying to say. A high resistance buy program. You can see it going higher. It's trending higher. It's starting to move higher, but it's doing it in a high resistance fashion. A lot of choppiness, a lot of wicking back and forth. Okay. So high resistance, but it's offering you an opportunity to purchase right now at a discount. So take advantage. Also inside of that monthly fair value gap, look at this down close candle right here. That's a monthly order block. So if I take a trend line at the opening price, right there, you can see price trade down into that. That was another opportunity to buy at a deeper discount inside of that monthly fair value gap. Remember, the fair value gap, the midway point, above it is a premium, below it is a discount. It's still a discount, but you're going to be paying a higher premium discount compared to a lower premium, a lower discount below the midway point. So anytime you're inside of a discounted fair value gap, you could be looking for a deeper discount as price trades below the midway point, and then trade inside of that order block right there, that candle right there. And that's exactly what happens. But high resistance, Tesla stocks are being manipulated, and it's in a long-term buy program. So it's in a long-term buy program, meaning it's going to take a long time for it to appreciate in value. But when it does, it's going to pay out real well. But right now, it's currently at a discount. Look at NVIDIA. It's not as weak as I thought. No, it's definitely strong. It's definitely strong because you can see the highlighted area, how we trade down, sell program down to the discount, buy program outside of the discount starting to reach for premiums. So for example, if I just walk back in price, it created this high right here back in November 2021. That was the previous all-time high, okay? That's buy side liquidity. It created that high and then sold off down to discount. We want to be a buyer at discount. We scoop up that discount and then it displaces higher in a high resistance fashion away from discount, and then it eventually goes up and attacks the buy side liquidity right there. You see that? Do you think it's random that we trade above that and smart money who purchase? I'm talking about, like, when I say smart money, I'm talking about billionaires, large entities, people who can utilize millions and millions of dollars in the market. Retail can't do that. I'm talking about institutions, BlackRocks, Berkshire Hathaway, central banks, corporations, Amazon. They go in here, they purchase a lot of fucking stocks, and then they can sell it at this swing right here. They can purchase in here and sell it and amass billions of dollars right here. Get out right there. And then they sell their stocks. I'm sure y'all saw articles a few months ago, billionaires still selling their stocks, etc. Yeah, they taking profit right there. And then because they got enough capital, because they run their businesses, they got enough capital to just go back in and scoop up a lot of this stock. You know what I'm saying? So imagine a corporation going in there and buying 10,000 shares of Tesla right now. Y'all do the math. Y'all tell me in the comments. How much is 10,000 shares of Tesla right now? Y'all pull y'all calculators out. Tell me how much is 10,000 shares of Tesla. And tell me, can retail do that, or can only institutions do that? Tesla is currently at $338. So $338. To go in there and purchase 10,000 shares of Tesla right now, that's going to cost you 3.38 million. Let's go ahead and round it off. It's going to cost you $3.4 million to go in there and purchase 10,000 shares of Tesla at this moment. So the average retail person can't do that, but large billionaire institutions and corporations can go in these markets and get in and out the market. You know what I'm saying? We can't do that. So a 338 price for Tesla is very expensive for the average person. So you can't purchase millions down here and then Matter of fact, let's do a percentage return. I'm gonna do this right quick. From the middle of this fair value gap, okay, and we're using $3.4 million. From the middle of this fair value gap, no, we're not using $3.4 million. Excuse me, let me start over. From the middle of this fair value gap up to this high, the previous all-time high, that is a return of 228%. That's a 228% return on profit. Okay, and institutions can get in here and do this. So let's just say an institution has, let's just say $3 million. Okay, let's say an institution places $3 million and purchases $3 million of Tesla stock at a price of $126. Okay, their return on investment, what you're gonna do is $3 million times 228%. Y'all tell me in the chat, what do y'all get? 228%. And to me, I feel like that's small money. That's not a lot of money for a large institution or a big bank or whatnot. That's not a lot of money for a bank. But what I got is $6.8 million. $6.8 million. So they put $3 million in. They waited a few years. It took a very long time. So you purchased in 2023 and you got out in not even a year, December 2024. Okay, you purchased in 2023, you got out in 2024, and that's a good profit. 228% off of $3 million, $6.8 million, and as price sells off back down into discount, they're going to take a portion of that $6.8 million, and what they're doing, they're reaccumulating back at a discount. Y'all see the narrative when it's explained to y'all? They reaccumulate at discount. So they go back in after taking profit. They take percentages of the 6.8 and they repurchase it at a discount. For sure, Lenny, for sure. But it depends, Lenny, it depends how much money you're working with. So let's take somebody who got $3 billion. Let's do $3 billion times 228%. $3 billion times 228%. I mean, shit. I mean, $6.8 billion. You know what I'm saying? So it depends how much money you're working with. The more capital you're working with, like these large institutions, I kind of lowballed it by saying 3 million. You got regular people with $3 million, but a large institution, a bank, $3 billion for a return of $6 billion, that's killing it. That's killing it. But you're still right. You're going to do way better in crypto. Or, you know what they do better in? They do better in the traditional markets, the NASDAQ, the S&P, their futures trading. Because remember, there's levels to this. That was more long-term slow growth. That was long-term slow growth investing. But you know what they're in there doing? Let's go back to my trade example from earlier. Let me clear some of this up right quick. I know it's a lot of stuff going on. Let me clear some of this up. God damn, I got a lot going on. Let me clear some of this up. So for example, you know what they're doing? Smart money. Do you know what algorithms are doing? So let's see what the algorithms are doing. So for example, you remember I told y'all earlier, going in here, purchasing this at a sell side liquidity. Let's go down to a 1 minute time frame. Okay. On a 1 minute time frame. And this is the AM session in the NASDAQ from earlier this morning. AM session goes from 8:30 in the morning to 12 o'clock midnight. So after taking out sell side liquidity down here, price displaces higher. It chops around a little bit, but you better believe smart money is in this. For example, y'all tell me in the chat, what is that right there? It's a BISI, and then also this down close candle is a order block. Okay? I'm gonna highlight that. I'm gonna reference that. Boom, right there. That's a fair value gap plus down close candle, order block. Can you take a look at NKE? I will, and I got to look at NVIDIA. Yeah, NVIDIA. I'm gonna look at it here in a minute. But I'm trying to show y'all the comparison of long-term investing into traditional stocks compared to Ferrari futures trading. Okay, so there goes the entry points right there. Smart money, price reverses. They accumulate. And let's just use some percentages. Let's say we want to get out at this high right here. So you see this old high right there? I'm going to draw that out right there. That's buy side liquidity. That's a target. That's a target. I'm going to highlight it blue. And that's where we want to take profit at as a smart money entity. As a smart money entity. So price trades down at discount. It displaces higher. Smart money is accumulating. And let's go over to the CME right quick. Let's give y'all the contract specifications for the NASDAQ. Markets. Equity index. NASDAQ futures. Contract specs. So for every 25 ticks, that's $5, okay? Every 25 ticks, that's $5. Every 25 ticks, that's $5. So keep that in mind. So 5, 10, 15, 5, 10, 15. So every point is $20. That's what I'm trying to say. 5, 10. Excuse me. Every point is $25. So every tick is $5. Every point is $25. Okay. Keep that in mind. We're going to come back and refer to that. So let's come back over to the chart. Let's just say you're a smart money entity and you enter on this order block right here. You see that order block? We're going to take the opening price of that candle. I'm going to take this tool over here, the long position tool. I'm going to place it on the opening price of that candle. And we're going to draw it up just like that. Boom, just like that. Okay. And then our risk, our stop loss, let's just say our stop loss is right there. So we're going to enter the trade where we're thinking like an institution. And I'm showing you what kind of profit they're, what kind of trading they're doing compared to long-term investing. So if we look at from entry to take profit, that was 317 points. Now remember, every point is $25. So this trade up to that high right there was 317 points. So y'all tell me in the chat, pull out your calculators. How much is that for one futures contract for the NASDAQ? 25 times 317. 25 times 317. Because this move right here was 317 points. Every point is $25 in the NASDAQ futures. I'm waiting for y'all to give me an answer. Not 6,300 plus. I need specific. Whip that calculator out. I'm giving you the math. I gave you the math. You're multiplying 25 times 317 because every point, this move went up 317 points. Every point is $25. Yeah, I believe y'all math is wrong. Let me do it again. Let me check my math. 25 times 317. Your math is kind of off. 25 times 317. 25 times, not 20, 25 times 317. No, it's every tick is $25. Let's come back over here. So over here on the right, it goes 0, 0. See where I got to highlight it? The index points. It starts, so everything to the right of the decimal point. You see that? This is how it goes in futures for the indexes. It's 0, 0, and then 0, 0 goes to 0.25. That's 5 points. It goes from 0.25 to 0.50. That's 10 points. It goes from 0.50 to 0.75. I'm wrong. I'm off. I believe I'm off. I'm tripping. Am I tripping? It's 20. Why am I saying 25? I thought it was 20. I thought it was. Let me check right quick. Because when I'm trading, I'll just be trading because I'm just looking at price. 1 second. Let me see right quick. My bad, y'all. My bad. Y'all are 100% right. Like I said, I got a long day. It's 20. Every point is $20. So again, it's 20 times 317. Y'all are correct. My bad. Long day. 20 times 317. And y'all were right. 6,300 is 6,340. Okay. Okay. Let's move forward. I'm tired as hell. So 6,340 on this one trade right here. So this is what institutions are doing. This is what institutions are doing. They're adding in futures trading. You can add as many contracts as you want. So institution might have an account that has, let's just say, $100 million in it. They might have a broker account that allows them to trade different futures products, and it might have $100 million in it. So let's use $100 million as our base equity. $100 million as our equity. Okay? Y'all got y'all calculators out? Y'all press 1 if y'all got y'all calculators out. Press 1 if y'all got y'all calculators out. So this broker, or these institutions, let's just say they got a account with $100 million in it. They're not going to risk more than 1%. Okay, they're not going to risk more than 1% trading futures. They're not going to risk more than 1%. So every time they put on a trade is 1% or less. So 1% times 100 million, that's $1 million. Okay. Okay. Let's just say they put on, let's just say, let me see right quick. Let me see right quick. 1 second. Let's just say, okay, let's just say this. Let's just say the institution puts on 25. They have an account with $100 million in it. They're going to risk less than 1% per trade. That will be under $1 million per trade, because I don't see them wanting to risk $1 million on every trade. No, they're not going to want to do that. So they're going to want to risk something less than that. So for example, this stop loss right here that I got highlighted, it will be 0.04%. So that's way less than 1%, 0.04%. So y'all take $100 million times 0.04%, and y'all tell me what is the risk. So take 100 million times 0.04%, and y'all tell me what y'all got as far as risk. Tell me what the risk is. There y'all go, $40,000. Shout out to you, Daryl. $40,000. So what we're doing is we're simulating that we're an institution and we have $100 million to trade with. Okay, and I'm just comparing this to, like, if you just join in, I'm comparing this. We looked at the Tesla stock, and I showed you, pretending to be a institution, how they only got like a 200% return on investment. So we're risking 40,000 on this trade. We're the institution. We got $100 million in equity. We're risking less than 1%. The risk is 0.04%. But let's just say we add 25 contracts. Let's just say on this contract right here, we're not going to add one. You already know what it was. It's 20 times 317. That gave us 6,340. Now multiply that 6,340 times 25. That's going to give us, hypothetically, 25 contracts and what it looks like in the NASDAQ for an institution. $6,340 times 25 contracts. $158,000. Shout out to you, Lenny. $158,000. And compare that to, and let's look at how long that took. Let's look at how long that took. So from entry right here up to take profit right there. Boom, just like that. That trade took 24 minutes, okay? So compare 24 minutes to Tesla taking years to get you a return on to get you a return on investment. So where's the Tesla stock? 1 second. Tesla. I thought I had Tesla pulled up. 1 second. Yes, Lenny. Yes, an illusion. A 30-minute candle. I was looking for the Tesla. 1 second. God damn it. Oh, here we go right here. So what I was doing earlier was we simulated from discount. This happened, this trade, this is Tesla. It went down to discount in 2023, and then it broke its all-time high in 2024, okay? And then after breaking its all-time high, it sold off. And what I was doing was I was showing y'all, okay, institutions, let's say they took $3 million and put it in this account right here. Let's say they purchased Tesla at a discount right here at discount, and they held it to take profit. Well, $3 million turned into $6 million, okay? But it took from 2023 to 2024. It took a very long time to do that. Now, compare that to futures trading, where they can run up capital in minutes. So this is a 24-minute trade, and you could have seen a return of $158,000 if you was hypothetically an institution. So $158K, and that took 24 minutes. So which one do y'all think? Which one, if you was an institution or if you thought like an institution, which one would you be utilizing? I mean, I'm sure they utilize both, but to make $158,000 in 24 minutes, you do that several times a week. Let's just say you do that, let's say 4 times a week. Y'all tell me in the chat, 158,500 times 4. You do that 4 times a week. And you tell me how long will it take for you to get to that $6 million threshold that it took investing into Tesla long term. You said damn near 4x, almost 5K per minute. That's why these markets, you got to be introduced to it. These markets are hit different. Too bad we don't have institutional money. We have to trade like retail. But guess what? This shit is available for retail. You can be whatever amount of capital that you have, okay? Whatever amount of capital, it's way smaller than institutional capital. But whatever capital you're working with, you could be leveling up your equity as well. You can start with 1,000 and go to 12,000. You can go from 12,000 to 25,000. You can be scaling up at the same amount of level as a institution on your level, okay? On your level. We're talking about entities that have billions of dollars. No, we're just retail. And to be honest, you don't have to get crazy with it. You're just trying to live and maintain. You're trying to stay out the way. You're trying to just live life and be free. You're trying to pretty much buy time and freedom for yourself. It's an illusion. You said you want to join the Patreon because you still haven't traded. What is that? TradeFi? What is that? But if y'all just join it, man, if y'all want to join, if you're just joining, the signal service is live. So we're going live with the signals. The link is in the description on my channel and under this live stream if y'all are interested in signals. Also, I got beginner lessons. So if you're not ready for the signals, you can sign up for the beginner lessons. Also, if you want to just be a member, and also included, if you sign up for any of these signals, if you sign up for any of these signals, you get access to the community. You don't have to worry about this $8 if you sign up for that. And then I got the all access. If you want to get all access, you get everything at once. So you get the lessons, you get the community and the signals if you want the all access tier. So that gives you everything. Okay. This is for serious people as well. So, you know, like you can't be timid. You can't fuck around with it. This is for somebody. This is for y'all that have money and y'all ready to start like putting it to work. If you got extra capital, if you got savings and you want to start putting it to work, you already know that your capital is not working for you in a savings account. And I'm talking about people that got like, you know, if you come to the description, you can read and it tells you each tier and who it's for. So if y'all want to come to the Patreon, it tells you each tier and who it's for capital wise. So if you somebody brand new, you can start off with $500. Okay. $500 is doable. Sometimes less. We're gonna have. I got tutorials inside of the Discord, inside of the Patreon, that tells you which brokers, which platforms, that we're gonna be using. So whenever y'all come over here, sign up, and if you already have signed up for this, do not hesitate. Get in there today. Do not hesitate because it's the weekend. So while it's the weekend, you can go ahead and be signing up for brokers, getting your broker account. So come in next week. For upcoming next week, you can go ahead and start positioning yourself already ready to go early in the week, signing up with brokers so they can KYC you. We're going to be doing it in a regulated environment. They're going to KYC you. They're going to get, you know, and then you can fund your account and then you can start receiving signals. So you can't wait. This is for serious people. So if you're not serious, don't sign up for it. This is for people who are serious and is ready to start getting signals. What's up, Night Owl? Yes, Patreon. The link is in the description. So the signal service is live. I'm going live with it. I got beginner lessons. I'm still working on the pro lessons. I'm just trying to build a community. It's going to be interactive as well. So if you're new to trading, you're going to get familiar with trading. So if you're new, you're going to start learning how this shit goes. If you want to start learning how trading goes, it's going to be fast paced. But we're going to get to it. All right. Shout out to you, Night Owl. Shout out to you. So, Lenny, I'm going to get to you. I'll get to you in the, wait a minute. NVIDIA. I'm going to look at NVIDIA and then, was it Nike? Did you ask me to look at Nike? Let me come over to NVIDIA and then Nike right quick. And then we're going to get up out of here. And I'm going to go live tomorrow. What I'm going to do tomorrow is I'll probably do a free training on my channel. Sign up to my Twitch as well. I got a Twitch account. Y'all sign up to that. I'm sure a lot of people is not on Twitch, but y'all definitely sign up to that. You say you think it's time to sell both? Let me go check it out right quick. Let me see. Go check it out right quick. So first one, NVIDIA. No. Lenny. For as far as NVIDIA, no. I'm gonna ask you this, Lenny, not trying to get in your business. When did you get in NVIDIA? That's gonna be a determining factor. Did you get in back in shit? When did you get in NVIDIA? Did you get in there in 2021? When did you get in NVIDIA? What time frame? What year? Because right now it's at a premium. I would not, if you got in, for example, look at my chart. If you got in, let's say back in 2023 time period. Oh, you said you got in at $40? Let me see right quick. Oh, hell, Lenny, what you talking about selling? Unless you really need the money. Unless you really need the money, Lenny, which I know you don't need the money, Lenny. I mean, shit. You don't need the money unless you just ready to just like, man, my whole, I get it. Okay, this is my thing. If you're up there in age, I understand. Like, okay, you ready to like kind of chill out. You want to start living life a little bit more, and you got an asset over here that it appreciating. And you ready to start living life. I understand. I can't take nothing away from nobody that want to sell. Younger people like myself, I think like BlackRock. I'm a miniature BlackRock. I think like assets over liabilities, because cash is a liability. Y'all know that, right? Fiat currency is a liability. So I'm more hold that shit, give some of it down to your family members. Definitely treat yourself though. Treat yourself, but your kids and whatnot, you know, leave some behind for your children, because Nvidia ain't going nowhere. Nvidia is just getting started. Nvidia is just getting started. Lenny, you balling though, man. $40. That's a blessing. That's a blessing. But yeah, I definitely understand if you want to take something off the table, but damn. Me, I'm going to hold it. I think it's just getting started. Like, nah, I wouldn't, man. Look, it's at 157. Nvidia is going to get up to $200, $300. It's going to get up there. So I'm going to tell you like this, Lenny, it's at a premium. We sell at premiums. We buy at discounts. So essentially you purchased it at a discount, and now you're trying to get out at a premium. You're doing well, I assume. So I think you're doing well in Nvidia. Me personally, I want to see more out of it. Let me zoom out to the 6 month. See what the 6 month time frame tells me. Look at that. Look at Nvidia on the 6 month time frame. It dropped down to this bissy on the 6 month time frame, and it's almost like gold, man. Like you struck gold, Lenny. You struck gold. I can't wait for crypto and digital assets to look like this. Okay, but you essentially struck gold, and we don't like to sell gold over here. Nvidia, let it ride out. Lenny, no, don't sell. No, I can't give you financial advice, but me personally, I'm not selling at all, because it's in price discovery. It's nothing above here. It's in price discovery. So nothing above price. Let it just ride, man. Ride off into the sunset. And you know how you dollar cost average into assets and whatnot? Start dollar cost averaging out of it. Don't sell all of it. Just start dollar cost averaging a portion out of it and start, you know, living life a little bit. Me personally, if I was up like that, I would be buying other assets. That's the only reason I would sell it, is to buy other assets. Or, you know, fund something. I don't know, shit. But Lenny, you told me you tired, Lenny, so I know you tired. Definitely live your life. Palantir was striking gold. Oh, Lenny, you balling. Lenny really balling out here, man. Like, Lenny is balling. Oh, you know, stock game. Let me see Palantir. Let me see right quick. Yes, let's look at Palantir. Boom. He said, okay, Lenny, when did you get into Palantir? Looks very similar to Nvidia. If you got those two stocks, man, god damn, God bless you. But Palantir going crazy. Got it at $20, way down here. Yeah, man, that's striking gold. Bought it at $20, up $130. And you already know Palantir is just getting started, man. Why? No, Lenny, no. Not time to sell, Lenny. Not time to sell. You know why? Let's put it in perspective. We are entering the AI age. AI is going to need chips from Nvidia, and then Palantir is data, artificial intelligence, etc. Ain't no telling what all Palantir is into, but you already know they're directly working with the military. That's their whole business model, military. So the capital from the government investing institutions is flowing through Nvidia and Palantir. So no, it's definitely not time to sell. Hold on to that. Now, if you need to take some to fund some other things in your life, I understand that. But keep majority of your damn stocks. And then you hold XRP, and then you, man, Lenny, you gonna be a billionaire. I damn near want to say, Lenny, you gonna be a billionaire. Lenny, you said you're not selling Palantir. Check Nike for me. Okay, I got you. Palantir is into yours and mine personal life. That's profitable for sure. Nike. Nike is a dinosaur. Let's go check out Nike right quick. Nike. Oh, Nike not looking too good. So what's the thing with Nike? This is a 6-month time frame. Nike created an all-time high of $179. It is currently trading at $72. Hopefully you're not still holding on to this. It's currently in a sell program. What's going on at Nike though? God damn. Y'all see this right here? Y'all tell me in the chat, what is that? That's a SIBI, sell side imbalance, buy side inefficiency. Sell side imbalance, buy side inefficiency. So after peaking out back in 2021, the pandemic hit, I guess. What, people stopped buying shoes, the sweatshops, they got exposed. What's going on at Nike? But it sold off, and then it created a SIBI to sell off to get short, go down lower. So it's currently in a sell program, market maker sell program. Okay. Nike opened up back in the 80s. It opened up at $17, 17 cents. Okay. And then it went perpetual, higher and higher. And this is a dinosaur. You know what I'm saying? We got other shoe companies now. We got other competition. We got off-brand competition. So we got a lot of copycats going on. There's people cloning Nikes. China over there cloning shoes and whatnot, even though this shit come from China, but they got a lot of off-market shoes. Nike ain't looking too good. Hopefully you sold out of that. You said they had to pay Michael Jordan recently? Damn. And Michael Jordan was Nike. If you don't know, Michael Jordan was Nike. If it wasn't for Michael Jordan back in the 80s, Nike wouldn't be they signed a deal with Jordan. Nike signed a deal with Jordan, and decades later, people was dying over Jordans. If you don't know, people was dying, standing in line. People was getting murdered over Jordans. That's how much high demand those Jordan was. But here it is in the age of AI and technology and whatnot. I don't see what's the point of Nike. Everybody needs shoes, so that's never gonna go anywhere. But they're not doing nothing to revolutionize. And, you know, to me, I don't buy Jordans. I'm not into Jordans like that. I like certain pairs of Jordans, but I'm not into Jordans like that. Nikes do have some other shoes though. Nike has some good shoes. It's still Nike, but it is what it is. Nobody's thinking about Nike right now. Let me zoom out a little further. Let's go out to the 12-month. But to be honest, I mean, Nike's at a discount as well. I'm not shaming Nike. It's at a discount. So it's dropping down. Let's see. It recently dropped down to this BISI right here, which is buy side imbalance, sell side inefficiency. It's currently in a sell program. See right there? It dropped down to that BISI. So to be honest, it's a perfect time to go in there to get Nike. It recently went down to $52 though. It went down to $52. So imagine scooping that up at $52. Only snipers and institutions know how to do this. Imagine getting that at $52, and now it's back at $72. So whoever bought down here at discount, they're back up in profit just like that. So imagine that. Okay. This sell-off was institutions and some fucking elites who no longer give a damn about Nike. Let's go ahead and crash the stock. But Nike still has a monopoly pretty much over shoes and whatnot. Maybe they're losing some factories overseas. I don't know. Or maybe the tariffs. I don't know. But Nike not looking good. Nike not looking good. You know what I really like in 2025? I like New Balances. Now, New Balances are very comfortable. I'm at the age now where I like comfort. I like kind of stylish, but comfort. And New Balances are fucking comfortable shoes, man. I ain't gonna lie. They're real comfortable and they stylish. They got some stylish designs. And I remember New Balance, when I was in school, you would get laughed at for having New Balances on when I was in school. And New Balance always was the elite running shoe as well. So that's that. But man, I appreciate y'all joining. Y'all be on the lookout for me tomorrow. If y'all in the Patreon, we gonna stay up. We gonna chat, whatever. I'm always available for y'all. That's what y'all pay for. And I love this. I love to do this. But if y'all want to get access to the Patreon, y'all click the link in the description below. Sign up to my Twitch. My Signal service is live. I got beginner lessons. And we're gonna move forward from that. We're gonna have fun with it as well. So I'm gonna make it interactive. We're gonna make it fun. But as soon as y'all get in there, y'all go ahead and I'll see y'all in there. We'll communicate in the Patreon. So inside of the Discord. So once you purchase the Patreon, whatever tier, you get access to the Discord. Make sure you download the Discord, and then we can be in there with our private community. So I'm trying to build that up as well. So we got a lot of people in there, but we don't have a lot of people in there, but I need more people that want to really into this. I love when people are into this technical analysis and wanting to learn how to trade. That's my passion. So I need more like-minded people who want to grow and understand how to do this. So appreciate y'all joining. Y'all be on the lookout for me tomorrow. We're going to go live, and I'm going to go live Sunday. It is the end of the month. It's the end of the quarter. Let's look forward to the second quarter of 2025. So I'll get back with y'all on the next one. Peace out.